Good morning, everyone, and welcome to the Prince George's Community Federal Credit Union Steps in the Mortgage and Home Buying Process. Today's presentation is brought to you in partnership with CUMA, which is Credit Union Mortgage Association, which is a full-service mortgage entity of the credit union and offers our members a range of mortgage solutions at competitive rates. As the premier credit union of Prince George's County, we have joined with CUMA to expand the mission of providing quality financial education to our community and lending insight into home ownership. Anyone who lives, works, worships in Prince George's County is welcome to open an account. We're one of the county's best-kept secrets with competitive loans and savings rates, as well as discounts to national retailers. We currently serve 17,000 members in the area and welcome you to come and experience the benefits of membership as well. Now, later on in this presentation, we'll display our contact information and answer any specific questions you may have concerning your financial needs. It's not too late to invite your friends and colleagues to join today's webinar. You should have received an email about 30 minutes ago, and in that email, there's a link that you could pass along for them to register and join the call. Please note that today's webinar is live and all phone lines have been muted. If you have questions, please feel free to type it in the question box or in the chat box that's located on your menu bar. All questions are private and they'll be addressed at the end of our discussion. Lastly, a recording of today's session will be available later on today on our website. And the details, we're going to send it to you in an email following this presentation. With that, I'm going to turn it over to our presenter for today, Sean Connell. Good morning, Sean. How are you doing?
Good morning, and thank you, everybody, for attending today's home buying presentation. My name is Sean Connell. I'm with the Credit Union Mortgage Association, which is the first mortgage entity of the credit union. I have 36 years of industry experience. And we are the credit union's first mortgage entity, and we lend nationally. So because you are part of a federal credit union, if you are looking to buy that second home, that vacation property or retirement home, wherever your mortgage needs are, we are able to assist you as a credit union member. And keep in mind that the mortgage industry is extremely fluid, so some of the statements may change, subject to change without notice. But let's go ahead and jump in and talk about the industry. Charmaine, you can share all the items on the screen if you would. But let's talk about where we are in the mortgage industry now. We are coming off of a historic low interest rate market. Over the last 2.5 years, interest rates fell to the lowest they've been since 1971, and which spawned a historic refinance market. Folks that had mortgages refinanced to the lower industry rates. People that were buying homes at that particular time got the benefit of lower interest rates, lower cost of funds. Right now is, it could not be more apropos. It's a fantastic time to get to buy your first home. We are solidly in the purchase market right now because everybody has refinanced to the lower interest rates. So, what's going to carry the day is your, buying a home and financing through the credit union. But it is a great time to buy. Keep in mind, the industry, we as credit union partners keep your interest rates as low as you qualify for. Banks, brokers that you may go to, they're in business to make money. They will charge you junk fees. They will look to charge you additional points, origination fees, because they're commission-based loan officers. Your credit union is there to make sure that you get a fair deal based on your qualification. So our loan officers are not allowed to change interest rate, charge junk fees, charge ridiculous originations, points and originations fees. So again, being a partner with the credit union community, we keep everything as low as possible, including the closing costs. And again, I mentioned that we lend nationally. Rates are still low, but they have gone up and they will continue to increase. So if you are interested in buying a home, this would be the time to do it. Interest rates have gone up twice this year. The expectation is by the end of the year, they'll be at 4, possibly over 4% from their historic lows. But that doesn't mean that you can't still go out and find a home. A 4% interest rate, ladies and gentlemen, yes, it's a little more than it was. But when I got into the business a long time ago, interest rates for first mortgages went to 18%. Car loans were at 24%. But if you are looking to buy a home, this is the time to do it before those rates continue to increase. We do lend nationally. We have every single program and product that's available in the mortgage industry. Every single person on this call may have different needs, different mortgage loan programs. So, it's going to be based on your qualification and your needs. We do offer first-time homebuyer programs with as little as 3.5% down. And that 3.5% down can be a gift from a family member, from a relative, if need be, if this is your first home. And a first-time homebuyer program is to just keep in mind, if you have not owned a property or on a deed or a note on a property for the last 3 years, you could qualify as a first-time homebuyer. It just means that you don't have to come up with the 10, 20, 30% down that's required sometimes. Now, one of the wonderful benefits of going through the credit union is certainly getting the lower interest rate, lower than industry closing costs. We're able to lend nationally, but we do offer what's called the Home Advantage program. And this is a program that is free to the members. Whether you buy a home or sell a home, you get a free cash rebate. So if you are looking to buy a home, our loan officers can certainly assist you in getting pre-qualified. They will also get you registered into the program if you need to be registered. But Home Advantage is the credit union's Zillow or Realtor.com. You'd be able to go in, register, find all the homes and properties that are for sale in the areas that you're looking at. You have all of the same NMLS information or the mortgage listing information on the properties. But the nice thing about this program, and again, it's free to the credit union members that use it and register, is that when you utilize an agent within this particular program, you get cash back free. That agent is going to give you 20% of their commission back for going and using them, going through the credit union for your loan. And again, that cash rebate can be used to pay additional closing costs or buy down the interest rate. When my wife and I moved here from Virginia Beach, I think it's going on 17 years, we had the best interest rate at the time. We had our seller paying closing costs. But in today, and what we did is after closing, we got a check for $3,000, which is, again, free money, another benefit of getting a great loan through the credit union and a free cash benefit that you could use. My wife used it for curtains and window treatments, but it was free money. So another quality benefit of going through. And again, when you apply and go through the pre-approval process, your loan officers can assist you getting you registered with the program accordingly on that. Next screen. We have a multiple different ways, and I call it generational, really. there's a few different ways that you can access the mortgage department. And I call the first is my son's generation. He's going to do everything online. So the credit union's mortgage website that you can access through their website, you can apply 24 hours a day and get pre-qualified 24 hours a day online. My son's not walking into a branch. He's not picking up the phone because that generation does everything online. Or you yourself may be very tech savvy, but you have the ability to go online, apply, and get pre-qualified for 24 hours a day. I'm of the generation that I'm certainly not applying online. I want to speak directly to a mortgage loan professional, have them address the questions that I want, and that loan professional can then take my application over the phone. So the credit union does have a few numbers here that you can call directly and speak to a mortgage loan professional with any and all of your questions, and they can assist you in getting you registered for the Home Advantage program, as well as get you pre-qualified, take the application, and move forward. We do have a direct referral membership. This is for my father's generation. He's certainly, he's 85 plus years old, from Ohio, military, retired. He's not going to ever apply online. He's not going to pick up the phone. So you can actually walk into the branch, and the branch can make a direct referral to us via the referral link and program that we have in place. Then our staff will then make the necessary arrangements to work and assist accordingly. And again, you can always, if you'll go back, Charmaine, you can always go back to the Home Advantage program and online. It's under the Home Rebate section of the mortgage website. And you can sign in for free. It's a free program. Begin your shopping online for homes. A lot of these ideas came about because we wanted to minimize contact over the COVID period. So a lot more electronics and things are in place on that. You can go ahead and switch screens. Now, there are differences between pre-qualification and pre-approval. Charmaine, you can go ahead and throw everything on the screen. A pre-qualification is basically speaking to a loan officer who does a quick calculation of what you could possibly afford based on your income and debts. It's not a firm commitment. So it's just basically what do you make, how much do you pay out. It sounds like you would qualify, based on that information. A historic pre-qualification tool it's usually about 4 times of what your total income is for the household. So for simple terms, if the total income of a household, let's say, is $100,000, you would probably qualify and get pre-approved for $400,000. Now, again, keep in mind, just because you all get a pre-approved for $400,000 or $500,000 or whatever they say that you can afford, doesn't mean that you go out and buy a $400,000 or $500,000 house. Buy what you're comfortable, buy what you need. When I got out of college, I got pre-approved for $87,000. I bought an $87,000 house, and then life happens. Hot water heater goes out, heat and air conditioning goes out, the car breaks down, and I was eating TV dinners to make everything work. So just because we say based on your income and debts that you go out and can buy a $400,000 house. If you want to, that's up to you. But if you're not comfortable with that, look for something that you're comfortable with. Remember, this is your decision. Now, if you're really interested in entering the market, I've got a niece who's interested in getting into the market. She started to look for homes. You cannot look for a home until you go through the pre-approval process. So you can apply online, you can call in, our loan officer will take you, and or you can have a referral sent over, but our loan officers will work with you, and we're going to take a complete application. We're going to get it, all of your income information, and everybody should have that. It's tax time, so all of your W-2s, your tax statements, your 401ks, your share account, draft account, deposits, credits, debits, all of the debts, all of that information, and then we're going to give you a pre-approval letter. And that is when you are ready to go out, work with your realtor to find a particular property to make a bid. If you are not pre-approved and you find your dream house, by the time you go through and get pre-approved in today's market is very much a seller's market. So you have to be ready when you find the property to make a bid on that property with your real estate agent to have a chance in getting that home. If you wait 1, 2 days, a week, 3 weeks to get a pre-approved, that property is going to be sold. And what I mean by a seller's market, there are more people looking to buy than there are properties for sale. When I bought my house, it was a buyer's market. So I could ask for closing cost assistance. I could ask for home inspections. I could ask for a lot of things because sellers wanting to sell their homes had to provide enticements for me to buy. Unlike we're in a seller's market, so you're going to go in, and if you ask for closing cost assistance or you ask for a break on the sales price, somebody is going to get that property because, again, the seller's kind of semi in control of the process on that. Once you get a pre-approval and you start the negotiations, which we'll go through, and you ratify a contract, the seller agrees to your price, you agree to the price, we go through what's called the full loan approval. And that's going to be a specific loan amount, a specific purchase price, and that's where everything really gets going, and we've got to make a closing date. Keep in mind, your pre-approval is only good for 90 days. So at the end of every 90 days, you will reach back out to your credit union loan officer and let them know if you're still interested and still looking. They will reissue you a new pre-approval letter. You can only lock your interest rate at the time of your full approval and you have a ratified contract. So once you have found the property, the seller's agreeing to sell it, you're agreeing to buy it, that's when we're on the clock. And that's when we're looking to get your interest rate locked in to move forward towards a closing period on that. So let's go ahead and move on that next screen. So why get pre-approved? Well, as I said, any realtor nowadays, it says most will not, all realtors will not show you a house right now without a pre-approval. And all sellers will not review a contract offer or get into a contract discussion unless they know that you are able to have financing on that particular product. The pre-approval shows all parties that you're fully approved and there's no chance of missing a settlement. If I was a seller selling my home and we came up to a contract and I pull the property off the market to find out 15 days from now that you don't qualify for financing, I've missed 15 days in the market of a potential buyer on my property. So it's very important, if you are interested, to go through the pre-approval process. As I explained to my niece who's involved in starting, she says, well, what do I qualify for? That's why you go through the pre-approval process, to find out what you qualify for. And then you make the decision, the financial responsibility decision on what you feel like you can afford and what you want to look to buy going forward on that. Next screen, please. So what's needed for a pre-approval? Well, you can apply online, and we'll handle all of that. you can call in, and our loan officers will take your application if you're like me, old school. Or you can make a referral. Our loan officers will call your member, you as the member back and walk you through the process. But what we're going to start with is a complete application. So we're going to do a complete application on you and your co-borrower, wife, husband, boyfriend, girlfriend. So we're going to do a complete application. We're going to get current pay stubs. We're going to get the W-2s from last year, your complete tax returns, account statements, 401ks, IRAs. We are going to pull a tri-merge credit report and any additional documents that we may need on that. And then we're going to work with and put your loan and run your loan through the industry, what we call Fannie Mae Desktop Underwriter. It's going to go through, and we're going to give you a pre-approval. That pre-approval, again, is good for 90 days. And this is where you take that pre-approval to your agent, and you're going to walk through and say, we're going to start looking at houses. When you find a house and you are ready to make an offer, let's say that you found a $300,000 house that you wanted, but you've got a $400,000 pre-approval letter. Before you make that offer, contact your loan officer and get the loan officer to make an updated pre-approval letter for $300,000. Because if you are, provide the seller that you can qualify for up to $400,000, you're just basically telling them that they can increase the price on that particular property because you qualify. So again, works closely with your agent, work closely with your loan officer on that. Now, once you are pre-approved, and I cannot stress this anymore, is do not go out after you've been pre-approved and add any additional debt. What we see a lot of times, more often than not, and it happens every month, somebody gets pre-approved and then they go out and buy that brand new pickup truck or SUV, and now they have an $800, $500 car payment, which doesn't make them able to qualify for a first mortgage. So before you go out and buy anything new, get your home, close on your home, and after you close is when you go out and incur any additional debt, because we do want you to make closing on that. So you're pre-approved, you're ready to go, and this is where you're going to reach out, provide your pre-approval with your, hopefully your Home Advantage real estate agent to buy a home. You are going to start looking at different properties and what you're looking for, number of bedrooms, number of bathrooms. Are you looking for a townhouse? Are you looking for a single family home? I will let you know that, and just keep in mind, condos are a little bit different. They're low-rise condos, high-rise condos. I'm not telling you to buy a condo or not to buy a condo. But I will tell you kind of some of the things you want to keep in mind on buying a condo. Because my wife and I own one down in Virginia Beach. The first thing with a condo is that on top of your mortgage payment, you will have a monthly association dues. When my wife bought her condo years ago, it was $75 a month, and the same condo dues now are $350 a month. The other piece of owning a condo is, and we found this out over the 19 years that we've been together, is that the condo association can put out an assessment for everybody to pay. So they put new windows and doors in the condos, but where does that money come from? Well, it comes from the folks that own the condos. So we had to pay about $9,000 to the association, part of our piece and everybody's piece, to get new updated windows and doors and roof on the property. Then they had a major plumbing issue at the condo, and we had to eventually pay another $9,000 on buying a condo. for the assessment for them to replace all the plumbings and pipes and different things like that. So I tell you this so you can go into the market, wide open, eyes wide open, and fully vested. Okay, so you're pre-approved. You got your pre-approval letter. You're working with your agent to find properties. Well, keep in mind some of the things that I do when I go out and buy. When I bought my house, interest rates were at 6 and 7.5%. I bought it up here. Interest rates were high, but it was a buyer's market. So, we were able to negotiate lower prices and different things like that. But when you are looking to buy a home, I recommend you do a few things. Do your research, log into the Home Advantage program, see what the school systems are, see what the neighborhood is. I always make a recommendation during the week, during the weekends, drive through the neighborhood in the morning, drive through the neighborhood in the evening. My wife and I did, and we love the neighborhood that we're in because it's an older neighborhood, it's a quiet neighborhood. One of my pet peeves is people parking on the street, and two cars can't go down one lane. So we drove through on the weekends and after work just to get a feel of the neighborhood and does it fit what we're looking for. You need to do it quick with your agent because, again, homes are increasing in value, increasing in sales price. But it's also going to help when you buy a home. There's a lot of benefits. You get to write off your interest on your payments on tax time at the end of the year. And it's also a way of building wealth. When you buy that home and over the years the appreciation happens, when you sell it, that money is yours. So you're working with your agent and you're finding a house. You find a house and then you make a written contract offer with your agent to the seller. Now the seller can do a couple different things. The seller can accept your offer and sign and say, I accept your offer, or they can make changes or counter offers. You could say, I want to buy this house for $300,000, and they come back and say, I need $310 because there's two other sellers that are trying to buy it, and then you can do a counter offer. In terms of the contract, sales price, seller paid closing costs. Don't ask in this market because they'll move on to the next person who's buying. But one of the main things that your agent, and you do want to use a real estate agent, is when you're buying and finalizing that sales contract, you want to make sure that items convey. A lot of members go in and say they're buying the house, but they don't note to keep the refrigerator, the stove, all of the microwave. So once they buy the house, if those items don't convey in the contract and your agent doesn't look out for you, which they will, to make sure you've just bought a house that now you need to go into and put a couple $1,000s in, buy new appliances, washers, dryers. So make sure that, again, that you're working with your agent in this process, making a competitive offer, making sure items convey, so you're not having any additional expenses at this time when you're buying that house. So once the seller does buy the accept your contract, that's what's called as a ratified contract. The seller's going to sign it, you're going to sign it, and what happens next? Well, what happens next is you get that contract immediately over to your loan officer. The loan officer will start working and get an appraisal ordered. We're going to get updated disclosure documents. We may need to update your expired pay stubs and refresh your documentation. So if we're asking for documentation a second time, don't worry. That's the process. A lot of the things that I learned 36 plus years ago have been changed completely. We are in a fully documentation state and industry now after the mortgage crisis. And so we have to fully comply with the industry's standards and all documentation requests. We're going to ask if you have a settlement attorney or a title attorney that you may have. Normally, it's referred by your realtor. If you don't, we own a title company that helps keeps the closing costs down. So if you need a closing agent or a settlement agent, and you want to save some money, we can certainly make that recommendation here. And if you're in the Virginia, Maryland, D.C., one of the nice things about using our title company is they will come to you for closing. I have not been to a closing attorney's office in years. So when my wife and I were able to buy our home, we met, my wife met me here at work, and the agents came and made it very convenient. We closed the loan here in the conference office at work, rather than having to drive into the city or someplace like that. So again, the next thing is that we're going to change and lock your interest rate in points. If you find your home, you're ready to buy, don't try to play the market. I've been doing this 36 years. I've won some and I've lost some. If you can afford that interest rate and you're ready to buy that property, lock and move forward. If you try to play the market and you think the interest rates may go down, well, tomorrow they could go up and it could cost you money. I have locked and interest rates have went down. I have locked my interest rate and interest rates have gone up, and then I was a hero. And I do this for a living, so we don't really know what the market's doing. If you can afford the payment, that's your house, go ahead and get that done and lock and work with your loan officer on locking that interest rate on that. What happens next? So we've got that. We've moved your loan into what we call the processing stage, and your processor will work with you in gathering documentations and do disclosures that are required by law. And once the file is complete, we submit it to an underwriter. The underwriter is going to do a final review and a final full approval on your loan. So they're going to go back through, they're going to underwrite to the Fannie Mae desktop underwriter guidelines that are required, make sure all the documentation is in place, and then approve your loan. And then once your loan is approved, we move into the settlement or closing stage on that. So bring some IDs, your driver's licenses, passports, whatever you need. You'll have the money for closing. You can do it as a certified check payable to the settlement attorney's office. That doesn't happen too many times nowadays. Everything is usually wired from your institution to the settlement attorney. But if you want to do it old school and do a certified check, that's able to be done as well. You will need to prove who you are at the settlement table, whether you go to them or they come to you. And you will then close your loan. When you close your loan, after all the I's are dotted, the T's are crossed, you will receive your keys to move in. So you're ready to move in, and I can promise you this is when you're going to know who your friends are. I happen to drive pickup trucks and have driven pickup trucks most of my life. And I always get a call from my friends when it's time for them to move and they need to borrow or need me to help them move into their new house. So hopefully you have your friends gathered, ready to help you move into your new home. Now, with that said, you can always go to our website. You can go to the credit union's website. But if you have detailed private questions you want to discuss with your loan officer, please give them a direct call. They will be able to address any and all questions that we may not be able to address or get to today accordingly on that. Charmaine, that's what I have. If you'd like to open it up for questions or.
That sounds great, Sean. That sounds great. Let me turn it over. We do have two questions here. The first one is, if a house sells for $340,000, and I am pre-approved for a loan, do I add extra to the pre-approved letter to show that I have an offer, or is $340,000, will that do? So I think they may be asking as far as the offer itself.
Right. Well, if you're pre-approved for $300,000 and you're now in the $340,000 range, that doesn't mean that we can lend you an additional $40,000. So if you're offering $340,000, you will need to bring the extra $40,000 to closing out of your funds. If you are pre-approved for $400,000 and you've got a $300,000, pre-approval letter, and then you want to move your offer to $340,000, you simply would call your loan officer saying, I'm making an offer of $340,000. I need an updated letter for you to at $340,000 to make with your next offer on that property, because it's well under the $400,000 that you're pre-approved for. I hope that answers your question.
Yeah, I hope that does too. Okay. The next question we have here, what are points?
Points and origination fee, and I'm glad that you asked, that is 1% of the loan amount. So when we say that you buy a $100,000 house, let's say, 1 point is $1,000. So they could say that that's 0 points, so there's no points, but there's a 1% origination fee. That's $1,000. In the commissioned world, that's basically loan officer income. Today's market, if you are buying a home for the very first time, interest rates are still low. I would say to make a 0-point quote, well, work with your loan officer. You want 0 points and 0 origination fees. And your loan officer will work with you to find you the very best program and product that you qualify based on no points and no origination fees. That just adds to your closing costs and the cost of your property. Very good question.
Okay, and that is it right now, Sean. That's all I see right now. I'll leave it open for another 5 seconds while we kind of close here. But,
very good. If you have any questions, ladies and gentlemen, call these numbers direct. They're going to be answered as Prince George's Community Federal Credit Union First Mortgage Department. I've got a staff of 20-25 loan officer assistants. They'll be able to walk you through the process as needed and necessary.
Well, thank you again, Sean, for presenting this information, and thank you everyone for attending today's webinar. Just like Sean said, if you'd like to learn more a little bit about our mortgage division of Prince George's Community Federal Credit Union, you could reach us via the information on your screen, or you can give us a call at 800-952-7428 or visit our website at princegeorgescfcu.org. Again, thank you again for joining today's webinar. And actually, you know something, Sean? We have one more question that popped up. Hold on a second.
All right.
Follow-up question to the original question about the $340,000. A realtor sells the house for $340,000. If I'm pre-approved for $350,000, is $340,000 the only amount to be indicated in the pre-approval letter?
Yes, because if you go back to the seller with a $350,000 pre-approval, they're going to ask for $10,000 more because they know that you qualify.
All right, perfect. That answers that question directly. All right. Thank you again, everyone, for joining, and thank you once again, Sean, for this great information. Again, if you need some more information from Prince George's Community Federal Credit Union, contact us with the information on the screen or visit us on our website. Thank you once again, and have a wonderful day, everyone.
Thank you.